morning, everyone. Today is Friday, July 8th. I'm Marv Eisen of Timeless Dollar, where I teach E-mini and micro E-mini trading. And starting out the day looking at the economic calendar, it's just prior to the 8:30 non-farm payrolls report, and that's expected to be down significantly from the previous several months' report. So that will put a drag on the market and a drag on the S&P price level, most likely. So moving over to the morning news, and the headline is, as I expected, June jobs report is not expected to show an economic slowdown or a recession looming. Heading on over to the S&P chart for yesterday, July 7th, I want to point out a couple of things that are going to be maybe a little eye-opening. I'm going to start out by making a statement. The object of trading is not to make money. And if you want to turn this video off because you don't agree with what I just said, that's fine. But if you bear out, if you hear me out and you bear with me, you'll understand. Trading is not easy. It's certainly not as easy as it looks, especially when we look at a chart in hindsight. Now, yesterday, prices started up at 38.67, went up to 38.90, a little over 38.90. So about 24 point gain in just about 20 minutes. You see, just about 20 minutes. And I have this range number 1 denoted. So in 20 minutes, the market went up 24 points. So to make 24 points in a 20-minute time period in the market is excellent. But let me point something out over here. In jumping on immediately at the open, the only thing that we know is that the previous day's close, which I have down here, is 38.48, and the trading range that I calculate out on my chart was also an area substantially below where the market opened up. So if you've watched previous videos of mine, you know that I favor the gap trade because it's a trade that is profitable 75% of the time. Okay, so we would figure that prices would close the gap, right? Would close the gap. So heading up in the opposite direction, or let's call it fading the gap, is something that prices actually did. But when you jump on the market without just on the seat of the pants trade because the market is heading in a certain direction, you open yourself up to two things. First of all, typically in the morning, there are stop runs. So stop runs typically are just above and below the morning open. So at that point, it's reasonable to expect the market to go up in one direction or down and then reverse suddenly. So the stop run is something that is a very costly mistake that many novice traders make. In fact, I'm going to say all novice traders make. In fact, even professionals, because let's face it, when the market moves suddenly in one direction, what's the cause of that move? So the market did run up very quickly and ran up right up and exactly to my calculated trading zone resistance level. And if you want to know how I calculate these numbers, you should look at my site, timelessdollar.com. This is an important calculation, and all professional traders calculate out the likely area where the market is going to trade on any given day, okay? So 24 points in 20 minutes, but without any knowledge beforehand that the market is going to do this, okay? Because no matter what we do in terms of tools to calculate the market or to make some kind of a wild guess that the market is going to move in a certain direction for a certain number of points and for a certain amount of time, it's just a wild guess. And whereas likely to be wrong is right. So yeah, you'll be right sometimes, be wrong sometimes, but on balance that doesn't make for consistent trading or certainly profits. And then I have another area drawn out over here. Area number 2, range number 2, let's call it. And in range number 2 is also a 24 point gain. And I measured range number 2. I took it from the pullback after the morning run up to calculated resistance. I took that at the median of the pullback, and I went 24 points, which was right over here. Okay, I started here. I went over here. This is 24 points. And that took 3.5 hours. 3.5 hours. So one of the things I teach in my course, and this is no secret, but it's important, the best place to be as a trader is out of the market. Exactly right. The best place to be is out of the market. You want to be in the market for as little amount of time, a short amount of time as possible. So to be in the market for 3.5 hours to make 24 points compared to 20 minutes for 24 points, we would all choose to be in the market for 20 minutes, right? Except there's something else here. There's another signal on this chart, and I haven't put it there. I'm going to put it there now. If you didn't take advantage of this morning trade, figuring that, well, it could be a head fake, it could be a reversal, and it's certainly counter to the conventional wisdom that the gap should close. If we just sit on the sidelines, I'm going to basically draw a trend line, okay? I'm going to draw a trend line, and I'm going to wait until, whenever I want to wait until, I want to be sure. I want to be as sure as possible of my trade. So I'm going to draw a line based on, let's see, at about just before 2 o'clock. Okay, this is just before 2 o'clock Eastern time. So I drew this line, and what does this tell me? Well, this tells me that there's support that prices are putting in throughout the day where the market is trending upwards. So this gives me information. This gives me information that the market is going to continue trending upward, and this is going to be a support level that the market will not violate. So right over here, taking a trade, right over here at about 38.95 would be prudent because the market is putting in, and let me extend this, okay? Let me extend this, okay? Let me extend this to right till the end of the day. So taking this trade over here, just around 2 p.m. at 38, call it 38.90, and finishing the day, just closing my trade just before the market closes at 3,900 would give me 10 points with pretty much assurance. Although if you figured that you want to drop out earlier, 39.12, you would have made 20 points. But still in all, this is a trade with more knowledge motivating it. So that's what I want to say. This is a trade based on knowledge. This is a trade based on a seat of the pants guess. And this trade, actually there's no real reason for this trade other than trading at the pullback. That really doesn't give us any insight, because what's the purpose of making a trade over here? What would guide it? I mean, if there's any kind of signal, I don't see it. So at any rate, that's my video for today. The point of trading is not to make money. The point of trading is to avoid risk. So please, my friends, if you want to be a successful trader, you want to learn how to avoid risk. If you would like some insight in how to trade, take my course, timelessdollar.com. It's not expensive. It doesn't involve hundreds of videos. There are only 6 trades that you need to learn to trade successfully. And if you would like to speak with me, I have a consulting service. You can schedule a 30 or 1 hour session with me, again, on my website at timelessdollar.com. Thanks so much for watching. Friday, July 8th. Have a great day and a great weekend.